Markets plunged on Thursday, as investors recoiled from another hotter-than-expected inflation reading that cemented expectations for another bumper interest rate increase from the Federal Reserve next month. The S&P 500 fell sharply lower, dropping to a loss of more than 2% for the day and setting a new low for the year. The fall comes after another drop on Wednesday, the sixth daily decline in a row. U.S. government bond yields, which serve as benchmarks for borrowing costs and are influenced by Fed moves, jumped. The two-year Treasury yield soared more than 0.2 percentage points to a new high of 4.5%, a big move for an asset that typically moves in hundredths of a percentage point. The Consumer Price Index report for September showed inflation rising from the prior month, the second month in a row that inflation has failed to moderate. The new data will be crucial for informing policymakers, and therefore investors, on how much further interest rates will need to rise before inflation starts to consistently fall. The report has also taken on greater significance as investors grow increasingly worried about the effects of rising interest rates on global financial stability, following further turmoil in British government bond markets this week. There are a lot of people out there looking for peak inflation. This is going to put pressure on the Fed to do more. Based on prices in futures markets, which show where investors expect interest rates to be after the Fed's upcoming meeting, the forecast is for a 3/4 point increase. Once a rare occurrence, that would be the fourth increase of that size this year. Investors also raised their bets on the Fed increasing rates by 0.75 point again in December and recalibrated expectations for how high interest rates could get next year, with a peak of around 4.86% in May, above the Fed's own forecasts. Some investors are still holding out hope for a more cautious move from the Fed, fearful that continued bumper increases in rates could push markets closer to a financial accident, similar to the shockwaves in British markets in recent weeks.